Good morning, everybody. This is the live market open for Tuesday, March 1st. It's a new month. I'm Yohay Elam, Forex and Market Movers Podcast.com, doing the show as usual for FX Rate. We had quite a busy 24 hours. We'll talk about that, the recent developments, what's the market mood, various charts and levels, the next 24 hours, and of course your questions. So if you cannot see the chat box under the screen, please go to tlk.io/fxstreet-forex-live-video. Okay, so let's talk about the market mood first, because that's what matters most, and data is often ignored. Okay, so the market mood, as you can see here, as I wrote, is positive. China cut the reserve requirement ratio. That means the banks can now lend more money. It's not the interest rate, it's the amount of money that banks are required to keep in their coffers and not lend out. So it has been positive development. This is more stimulus. If Chinese banks can lend more money, more projects can be started, and that means that more economic activity, more demand from the rest of the world. And we're talking about China. We also had PMIs, Purchasing Managers Indices. They were worrying. They came out worse than expected, but so far they were ignored. Another China-related story, remember it's the world's second largest economy, is that U.S. Treasury Secretary Jack Lew, as he's still in China, he was assured by China about currency intervention. They're not going to intervene to weaken the yuan, going to maintain stability, and that's also sort of positive news. And moving to the United States, we heard Bill Dudley also overnight, number 3 at the Federal Reserve, the president of the New York Fed, slightly dovish. He said that, he used the word slightly quite a lot. He said that expectations, his economic forecast is a bit lower, that he's less confident about inflation, about growth. Still sees unemployment falling to 4.75%, but in general, less confident, more dovish. That means the Federal Reserve is also there to support markets. And oil is moving higher. There weren't any developments that I know of directly regarding oil, but we do know that, with the better mood, we have higher oil prices, okay? So let's take a bit of a look at the chart. Now, let's talk about a few more figures. Morning, everybody. Let's talk about figures that also, the figures were bad, okay? The mood is positive, but the data wasn't that good. So first and foremost, Eurozone inflation missed badly. We talked about that yesterday, the main event of yesterday's morning. It came out negative. The Eurozone fell back to deflation, a drop of 0.2% in prices. Year over year, worse than zero expected. Also, core inflation missed with 0.7. It was expected to slide from 1% to 0.9. And but it's bad news for the euro. We'll soon look at the chart. But of course, it's good news for the world because the ECB is more likely to print more money, more QE. The negative deposit rate can be lowered even further. And that's, of course, what helps the mood, okay? We also had negative figures in the United States. The Chicago PMI missed, fell below 50 points to 47.6, to contraction territory. U.S. pending home sales missed, not the first-year figure. Today we have first-year figures, but it missed with a fall of 2.5%. And Chinese PMIs, which I mentioned beforehand, both came out worse than expected. The official one was expected to come out at 49.4. It came out 49. And the unofficial one came out at 48 instead of 48.4. So maybe 0.4 points doesn't sound so much, but these are closely watched figures in China's manufacturing. And the RBA, last but not least, did not rock the boat. They did not make any changes. They did say also that the world is growing in a slower pace, but that the Australian dollar is moving along with the changes in outlook. In general, they're not worried about the Aussie dollar, and that helped the Aussie. Okay, so before we move to today's events, let's look at the charts, of course. Let's begin with euro dollar. The downtrend continues. Currently 108.75, which is exactly 500 pips off the highs seen not that long ago. Okay, so if we let's switch to the hourly chart. Here we are. Look, well, this fall has been most of the time quite gradual. On Friday, it hasn't been that gradual. We saw an attempt. Yeah, it's a busy day. We had an attempt to rise above resistance at 109.60 yesterday morning. This attempt failed. We fell to lower ground. Maybe let's add another line here. The lows seen yesterday. Yeah, that's 108.50. I don't know if it's that strong. It's just the lows seen yesterday. Currently, we're just above that line. So the current range is 108.50 to 109.60. Okay, at least your dollar is trading in very, very clear ranges. We had this big slide here, then a fall below 110.70, which was a strong line. Some range trading between 109.60 and 110.70. Another fall. Now we're in the lower range, well-defined range, and next line on the downside is 107.70, but really, really strong support awaits only at 107.10. Okay, so the euro is under pressure due to higher expectations for the ECB to act. When we have the ECB meeting in 9 days from now, on March 10th, what will we see? Will we see Draghi over-delivering on expectations and pushing the euro even lower, like he did in January 2005, or we'll have, by the rumor still the fact, extremely high expectations, not enough delivered, even if he delivers a lot, and a bounce of euro dollar like we've seen in December 2015. This is the big bounce right here. Okay, December 3rd, just 3 months ago, 460 pips range in 1 day. Okay, anyway, euro dollar remains under pressure. The rest of the world doesn't look that bad. For instance, UK, with all the fear of the Brexit, is grinding its way higher. Okay, so it's about 40 pips higher on the day. It found support over there at 138.40. Okay, so we're still, of course, on lower ground. 140 works as resistance. Support 138.40. Let's see, we have figures. Bon dia, yeah, that's in Catalan. I'm in Barcelona, Catalonia, Spain. Anyway, so we're bouncing here off the lows with, of course, the world is still talking about Brexit. The G20 summit was talking about a Brexit as a danger to the whole world, but maybe that was exaggerated. Now the pound is rising. Dollar yen, also a bit higher. That means there's less demand for safe haven currencies, more demand for the US dollar. We already fell off the highs of 114, 113.20 still works as resistance. 111 is the double bottom below. Very, very, very strong support. Okay, dollar CAD. Dollar CAD is falling. We are challenging the very important, I'm not using this superlative too much, but we had dollar CAD. Remember this 134.60 line we talked about late last year in the fall as capping the pair twice. Look at double top once here back in September, and then attempts to break it failed until they succeeded, and we had the pair move 1200 pips higher all the way almost to 147, and from there, once the Bank of Canada did not cut interest rates, we had a spectacular fall back down. We're almost near completion of a total U-turn. 134.80 is the low for today. 20 pips above support at 134.60. So critical support for dollar CAD. Resistance at 136.50. Okay, so there we are with an improving Canadian dollar, with improving oil prices. Australian dollar. Here we had so many figures. At the end, I didn't move as much as I had hoped. We had both Chinese PMIs that were disappointing. We had Australian building approvals, which came out worse than expected, but the RBA was stable. We did see a fall to lower ground, but then we had a bounce back up. Remember, China yesterday cut the reserve reserve requirement ratio. Good news for China, and countered the PMIs. And I think I wrote on Forex Crunch yesterday that perhaps the Chinese move to cut the RRR came in knowledge of worse than expected figures. So we had they mitigated it. Good morning, everybody, and that helped. Also, the RBA helped by not expressing worries, and the Aussie dollar is back up. 72.20 is resistance. 72.80 follows. 71.40 is now very weak support, followed by 70.40. Kiwi dollar, quite a roller coaster. It went above 67.40 last week on some good news on risk on, then fell because of weak data at the wake of the new week. And now it found support at 65.50, and it's rising above 66. 67 is resistance as far as I see. A comment here from Jax. Didn't China do that before? Yes, they cut the RRR before. They cut interest rates. They injected liquidity. Perhaps you're referring to sort of front-running bad data. I don't remember another instance of that, but it could have been this way. Remember, officials know the data before we do. So here we are. Anyway, dollar Swiss hugging parity at the moment. The fall of the euro against the dollar helps the pair move a bit higher. Anyway, we're hugging parity. We went above this line beforehand, and yeah, 170 is some kind of resistance. 99 is some kind of support. Cut the reserve rate. Yeah, they did it quite a few times last year. So yeah, that's one of the measures of stimulus that they enacted. Yeah, it happened quite a few times. Every time that happens, it's of course another shot in the arm for the global economy, or for markets at least. Anyway, dollar Swiss is currently there. Euro Swiss had quite a sharp fall yesterday, but from there we had a bounce. Is the Swiss National Bank acting over there? I'm not so sure, but you never know. After such a big fall, we have such a nice bounce. Anyway, just around 108. Currently, we have a range between 108.40 and 108.70, 109. Anyway, yeah, China, you never know what's going on over there. Anyway, let's continue. Euro pound. Euro pound continues its reversal because we have a weaker euro due to falling inflation and higher expectations from the ECB to act, and some calm in the UK after all the Brexit hype. I'm sure the Brexit talk will return, but it's maybe a calm between the storms. At the moment we're under 78 cents. There, 77.40 is support. 78.50 is resistance. Okay. Euro Swiss fell to lower ground. Yeah, it fell to 122. Weaker euro because of the inflation figures and relatively stable yen. Now it's rising just a bit, but not going anywhere fast, I would say. So it's, yeah, where can we put resistance here? Maybe we'll put it at the round number, which was also support. I don't know how many of you are trading this. Anyway, 123 is resistance. 22.40 is support. Let's continue. Pound yen, also here we have some kind of stability with the Gepi, with the Dragon. We have support right here at 156. No, perhaps a bit higher. 156.10. Very low support, 154.65, and resistance at 160. Oh, and as always, it's a very, very exciting currency pair. Lots of pips to be made and to be lost. Perhaps more resistance right here at 158.50. Okay, we have oil here. Usually I jump to oil just after talking about CAD. Anyway, 34.15 on WTI crude oil, and the high end of the recent range. So resistance there at 34.80. Better mood in markets, higher oil prices, but remember, there's still too much oil sloshing around in markets. could be just a correction. So at the moment we have better mood markets, higher oil, higher stocks, higher commodity currencies, even a higher pound, and the euro and the yen, which are safe haven, but it's mostly now the euro suffering on its own due to inflation figures. A comment here: the pound looks bid. Your view of the pound manufacturing PMI may help, bullish if positive. Yeah, that's the next topic on the agenda, which is the event for today. So at the moment, as we speak, we have Eurozone manufacturing PMIs, and then at 9:30 GMT, after the show, we have the UK manufacturing PMI. So let's look at the data. We're expecting a fall from 52.9 to 52.2. Okay, any positive surprise? In a few months ago, we had a positive surprise out of the blue. That was back in November. Okay, that was sort of a really came out of the blue, that suddenly after long months of falls, we had this spike back up here in November. It didn't last that long. We went back to the old mediocre. At least in the UK, the manufacturing PMI is still above 50, still represents expansion. Okay, in China, we're in a contraction zone. In the United States, we're in contraction zone. And also in the Eurozone, we're battling contraction. So that's where we are. It's always a critical figure, because even though the manufacturing sector is quite small in the UK, of course, it's the sector that actually produces stuff. That's why it's also important. In other countries, I would say that if we have better than expected figures, or hopes for better than expected figures, we could have markets front running this event. It happens very often with UK releases that we have the pound rising or falling in the 15-20 minutes that precede the publication. Okay, so we might see it happening also now. I would not rule out a negative surprise here, because manufacturing looks poor all over the world. I would not rule out even a fall under 50 points. So, and if we have that, we could have a blow to the pound. Remember, the pound moves these days more on political events and market mood than on what's going on in the actual data. But I think this piece of data is still of importance, still a first tier, top tier figure. Anyway, I have here a comment about Swiss figures coming out. Yeah, we have retail sales in Switzerland beating expectations 0.2% instead of a fall of 1.2. Swiss franc usually ignores the figures coming from home, moves more according to the S&B, to the moves in the euro. Anyway, before we talk about other events later in the day, let's look back, as we already have. Why is that missing? The Spanish figures. Let me filter that in. Yeah. Okay, so we now have manufacturing PMIs from the Eurozone coming out, dripping one by one. So we already have the figure from Spain. It came out worse than expected, as you can see here, 54.1 instead of 54.4. Okay, slower manufacturing in Spain, where I am. Then we have, towards the end of the show, the figure from Italy. And we have the final figures from France, Germany, and the whole Eurozone. Remember, we already had the preliminary figures from these countries. I mean, from the two largest countries in the Eurozone and for the whole Eurozone. More important, perhaps, than the PMIs this morning from Europe is the German unemployment report. Okay, so the unemployment rate is, as you can see, it's been tumbling down. It's looking good in Germany. It's currently at 6.2% and is expected to remain at this level. More importantly, I mean, for markets, is the unemployment change. It means the change in the number of people out of the workforce. Okay, so we had a loss. I mean, 20,000 people leave the ranks of the unemployed last month, and now it's for February, for the month that just ended yesterday, we're expecting a drop of 10,000. So the labor market in Germany looks good. It's relatively easy to find a job there. Unemployment rate is falling. wages and standard of living, that's already another thing. Anyway, that also has an impact because Germany is the biggest and most important economy. Okay, so this is just after we finish the show, we get that. Okay, we talked about German employment, Eurozone PMIs, the UK PMI. We also have the Eurozone unemployment rate, perhaps a bit less important than the German change in unemployment, but this is still of importance. In recent months, we had improvement, some kind of an improvement. The ECB did tap itself on the back for that. So until 2011, it was stable under 10%. Then we had it rise. The second recession, the second crisis in Europe, had it rise all the way to 12.2% right here in 2013. Since then, we had a significant improvement, very gradual, but still, including here in Spain. Currently, it's at 10.4. It's expected to remain unchanged. Remember that in recent months, we had a few positive surprises. So hopefully, we'll have a positive surprise first from Germany and then from the whole Eurozone. It could help the euro just a bit. But remember, the euro moves by the central bank. The central bank looks at headline inflation more than anything else. Okay, let's continue. See what else I highlighted here. I don't know why I skipped the Canadian GDP in my slide, but anyway, here we are, Canadian GDP at 1:30 GMT, 2:30 here in the old continent. We're expecting for the fourth quarter, it's the last release for the year. Canada releases GDP figures on a monthly basis. So month over month for December, we're expecting only a rise of 0.1 after 0.3. And quarter over quarter annualized, the same system as in the United States, we're expecting 0% after 2.3. This is important for Canada. Canadian dollar enjoys rising oil prices, and it's generally bid. Let's see if the GDP figures support it or not. Okay, so it's also perhaps a critical test for the Canadian dollar as dollar CAD approaches, as it already became friends with the previous resistance line that now is support. Okay, 134.60. If we have an excellent GDP figure, we could have a decisive break below this line. And if it's a disappointing one, perhaps we'll have a decisive bounce. Okay, so now we're just flirting with this very critical support line. Yeah, a comment here. Germany is the mini job phenomenon, no true relief for the people. What's the mini job phenomenon? Anyway, I know that wages are not that high, that, for instance, Berlin is a very cheap city. Anyway, let's continue with the events for today. The main dish for today in the US session is, of course, the ISM manufacturing PMI. Okay, top year event, undoubtedly. We already had the United States manufacturing sector fall into a recession according to these figures, deep contraction for a few months. This time we're expecting a small improvement from 48.2 to 48.5. I would not be surprised, given the Chicago PMI we had yesterday, given other figures, that it'll come out worse than expected, dive to deeper ground below 48 points. Anyway, it's also important to note the employment component in this release, because that feeds directly into the non-farm payroll report for that will come on Friday. Also worth mentioning here is markets manufacturing PMI, because last week, well, it's the final PMI. Last time it was 51, probably be more of the same. What we had last week from market that was surprising was the non-manufacturing PMI, the services PMI, which came out worse than expected, significantly worse than expected, came out at below 50 points, and that was really bad news. Of course, it comes from market, not from ISM, so we'll have to watch for ISM, but it's still worth mentioning. Anyway, ISM manufacturing PMI, today it's the day of the manufacturing, but from ISM, from the most important institution. Also watch out for, well, construction spending and the prices paid, but I would say, first of all, headline figure from the ISM, manufacturing PMI, and then the employment component. Okay. We also have here the New Zealand global dairy trade. For those of you trading the kiwi, this is important because it's New Zealand's most important export, the price of milk. Okay, so it's, of course, we had 4 consecutive falls in the price of milk, and now perhaps we'll have a bounce. Anyway, any big change here moves the kiwi. Even every small change moves the kiwi quite a lot. Okay. So let's continue. Any questions? Yeah, of course, at night. Let's move on to those night owls. Yeah, nothing more. Oh, okay, before we move deep into the night, we have worth mentioning is the API weekly crude oil stock. Okay, that's American Petroleum Institution. It's not as important as the crude oil inventories by the Energy Agency, but last time we had a jump of 7.1. This time I don't have a consensus, but it also has an impact on the price of oil, which has an impact on the price of and the general mood in markets. And during the night we have GDP from Australia. It's a bit late. Yeah, we're already towards the end of the first quarter, and this is the figure for the fourth quarter. Anyway, GDP in Q4 is expected to rise only 0.5%, worse than 0.9 seen last time. All right, slower growth, and also year over year. No, here we're expecting more of the same, 2.6 instead of 2.5. Anyway, of course, it's a top-tier event for Australia, very critical. We'll talk about the result of this tomorrow morning. It happens at 1:30 GMT. Yeah, 2:30 here. See here, it's more or less the events I wanted to cover. Now let's see a few comments from Sinatra. Well, Sinatra says people earn 450 euros per month, that's all. Then go to the Arbeitsamt and apply for stock up and do not appear in the official unemployment figures. Oh, this way Germany keeps between 1 and 3 million underemployed out of the statistics, phenomenon also known as working poor. Yeah, I think in general we have a rise of the working poor in many countries. In my country, in Israel, many people work full-time and they still don't make enough money. They're under the poverty line and they live a very miserable life. What you're describing here in Germany is 450 euros, even in Germany, which is a relatively cheap country in Western Europe. It's not enough to live. And yeah, and this is underemployed. Yeah, like in the United States, the U6, remember, the official unemployment rate in the United States is 4.9%. We'll have fresh figures, of course, on Friday. But the real unemployment rate, U6, which includes people who are too discouraged to be counted in the workforce and people who are working part-time involuntarily, which is the same phenomenon like in Germany. And this figure already reaches 9.9%. Okay, so instead of around 5, it's around 10. It's basically double. If we're already talking about these kind of things and politics, it's Super Tuesday in the United States of America, which means we have primaries in, if I'm not mistaken, 11 different states, both in the Democratic Party and the Republican Party. There's most states it's both parties, and some we have, I don't remember exactly what it is. Anyway, it's a big, big political day for the United States of America. I'm mentioning this only now, half an hour into the show, because I don't think it'll have a significant market impact on currencies. Of course, we'll have to wait and see. Basically, markets want more normal candidates, more stable, more mainstream. Like in the Democratic Party, it's Hillary Clinton. Markets don't want someone like Sanders who undermines the system in which corporations have a lot of influence on politicians. They don't like that at all. And they don't like people like Trump, which is just all over the place in terms of whatever he says, and you never know if he's pro-choice, pro-life, pro-guns, against guns, pro-healthcare, against healthcare, advocating war crimes like taking out families of ISIS members at one point, and at the other point talking about accepting Syrian refugees. Anyways, and they prefer candidates, markets prefer a candidate like Marco Rubio, which is very, very mainstream. We also have Ted Cruz, which is not so mainstream. Anyway, it could be decisive. For the Republican Party, it's safe to assume that after this race, we will have less candidates, that some will retire, probably Kasich and Carson, which are still in the race but are doing quite poorly. But we'll probably have Trump, Cruz, and Rubio continue. But it could, according to polls, Trump will have a good advantage, and this could mean more headaches for the Republican Party. And this perhaps could have an impact on currencies, but I cannot really put my finger on. I really don't know. And for the Democratic Party, Hillary Clinton is expected to win more states, and she currently already has a lead, but you never know. Sanders won very nicely in New Hampshire, but Clinton defeated him, killed him in South Carolina. Now we'll have 11 states, and let's see how this goes. Of course, markets want Clinton vs. Rubio. It would be sort of the most, of course, there's a difference between them, but it'll be sort of staying in the mainstream. They don't want Sanders vs. Trump, so it'll be very, very interesting. For politics, markets, of course, want more stability, but I'm not sure that will have an immediate impact. It's a big step in the race. So far, we had, if I'm not mistaken, 4 or 5 states having their primaries. Now we have 11 in one day, so I'm sure it'll be interesting. But it's not the end of the road. There are 50 states in the United States of America. Okay, so. And that's where we are. Let's see if we have more comments, questions, and let's see what's going on in markets. Let's look at euro-dollar. Okay, during the show, euro-dollar continues its grind to the downside. Did we have some figures from... No, we didn't have new figures, but we have this... From the Czech Republic, this doesn't have an impact. And but anyway, the euro-dollar is continuing its way south because of what we had yesterday. See a few comments here. US politics is such a mess. Yeah, Germany has a master's degree in it. Hillary or Trump, that's like saying, should I jam a fork in my eye socket or stick a cactus in my arse? Yeah, either way it's going to suck. Yeah, so I agree. When people here in Spain complain about their politicians, you can always look at the United States and feel better. So a question from Fabian and then from Boris regarding euro-dollar. What can move euro-dollar today? Of course, I think the German unemployment figures at 5 to 9 GMT. Okay, that's important because if we have another, it could help perhaps the euro recover, because German employment situation, according to what markets look at, not looking at the working poor, what we talked about before, the many job phenomenon is doing better, so perhaps that could be positive and give a boost. If, of course, it turns negative, if even the German employment figures go negative, it's, of course, bad news for the euro. Eurozone unemployment rate could have a minimal impact, but it's mostly US figures, the ISM, manufacturing PMI, which we talked about. What's the big move in GDP this morning? You mean GBP, I guess, the pound? Yeah, okay. Pound dollar and pound yen. I would hazard a guess. Why doesn't the screen? Okay. Yeah, I would hazard a guess that it's the European Open that we have some more action, and more importantly, expectations towards the UK manufacturing PMI perhaps more optimistic. Perhaps markets are front-running it. But in general, the market mood is better. That means a stronger pound, stronger commodity currencies, weaker Japanese yen. So if we move to pound yen, yes, we have quite a nice move here. So it's already over, 100 pips on the day. 157.82 at the moment. It found support there at 155.15, 155.10. Resistance here at 155.50. So again, a better market mood, especially so the pound is stronger. Let's talk about Brexit. I mean, the attention span of markets is very short, as we all know. So let's talk about Brexit. Perhaps some hopes for the manufacturing PMI, and with better market mood, higher oil prices, higher stocks, we have less demand for the Japanese yen. And here we see dollar yen moving higher. So the yen is falling, the pound is rising. Basically, risk on mood with pound yen, and also to a lesser extent on pound dollar. I hope this answers the question. Yeah, comment here by Jax, like watching a cartoon. Yeah, politics. I've seen a great, if you have time for that, search for John Oliver and Donald Trump. He did a segment about Trump a few days ago. It's really, really funny. Or if you look at Let's Make Donald Trump again. Anyway, I found it quite hilarious. It's around 20-something minutes. So if you have time for that, your lunch break or whenever you wish, that's really funny. Anyway, more questions, more comments. Let's take another look at euro dollar, the world's most popular currency pair. Feeling the heat, pressured to the downside. Just before we end the show, we'll get fresh figures also from Italy with the PMIs, but I'm not sure it'll have such a big impact. A comment here from Sinatra: I expect the last spark of positive German figures before the Volkswagen effect will kick in full steam, considering the shockwaves it sends into all the peripheral industries grouped around it. Yeah, do you think the Volkswagen impact is really that big? I mean, when it came out in late September, it was a big shock, of course. The stock plunged, worries all over the world, returning of so many cars. But as far as I know, they've since stabilized. Or do you think it's still a big issue for the company and therefore for the German economy? I mean, since then we had Deutsche Bank with its own troubles. So anyway, I'd love to hear your opinion about that. Let's see. Tomorrow we'll already have the results of Super Tuesday, of course. Of course, we'll talk about that. I hope we will have some impact on markets, whatever the results are. I doubt that. But of course, we cannot pass a day without talking about quite a big political event from the world's #1 superpower. Anyway, but for currencies, it's the ISM manufacturing PMI, and which is the first hint towards the NFP. Okay, let's mention a few more events this week and then begin the wrap up. So on Monday we had the inflation figures. They came out significantly worse than expected, and this has a negative impact on the euro. We're seeing it now. We talked about it a lot. This morning we had Chinese PMIs worse than expected, but thanks to the surprising RRR move, wasn't that bad. Australian rate decision was a non-event. Canadian GDP today, for those of you trading the loonie, could be make or break for the critical support line. ISM manufacturing PMI, we talked about that. Tomorrow, let's already take a look into tomorrow. We talked about Australian GDP. We also have the ADP non-farm payrolls, a significant hint for the non-farm payrolls on Friday. Oil inventories, as always, it's a mess. And Thursday, we have the ISM non-manufacturing PMI, the biggest hint, the biggest sector, the services sector. And on Friday, China is still with us with the trade balance, but the non-farm payrolls is, of course, the main event. There will be a live broadcast on FX Rate. Let me look for the link for you. Yeah, here I found it. So you're welcome to join the live coverage. Register here. Okay, live coverage of the NFP. I see here a comment. Is it more important German employment rate or change? I would say the change, because the number it's been, because that's what most most market participants focus on. So a negative number in this case is of course good news. A loss of a loss of jobs, a loss of people moving out of the ranks of the unemployed, and the unemployment rate moves just a bit. Okay, doesn't make big waves. Okay. Another question: if Draghi enhances QE, can euro dollar touch parity or below? In theory, yeah, of course, everything is possible, but I don't think it's that. I mean, the euro still remains bid. Let's not forget one important thing about euro dollar. There is a positive trade balance. Money is flowing into the eurozone. If nothing happens, the euro rises in value. You need a negative deposit rate to push money out. Money printed and to devalue the euro. This finally happened and pushed it really low, but also another thing we've seen so many times, especially in December, when everybody's short euro dollar, there's nobody left to sell. So when Draghi did deliver a cut of 10 basis points in the already negative deposit rate, extending QE by 6 months, announcing also that the ECB will reinvest proceeds, which is quite a lot of stuff, but it didn't meet expectations. He didn't enlarge QE on a monthly basis. All these shorts were squeezed, so we had a jump in euro dollar. So I would say there's more room to the downside, but parity or below. Some Goldman Sachs, I think also Deutsche Bank are talking about parity at some point. I think it's a bit too far out. 105 would be a more realistic target. I would say perhaps later in the year a drop below the low seen last year of 104.60, very important line. But my guess is 102, 103 would be the maximum, but you never know. Also, the ECB is limited. We would need to see also governments take their share, right? Anyway, another comment here, a question. To my impression, VW, Volkswagen, has been just kept out of the news, but the fire is still burning. Okay, very interesting. I'll watch that space, watch the financial reports of VW. They're still, I think they still have damage to their brand. Well, let's see how much damage they have to employment. I have a friend here in Barcelona working for VW here in Barcelona. He always tells me that the atmosphere there is relatively calm. But, well, he joined only in December, but let's see how things are going in the wider scheme of things. Of course, the biggest activity is in Germany, in Wolfsburg, if I'm not mistaken, in northern Germany. Yeah, okay. So, time for the wrap-up. This is the wrap-up for the live market open for Tuesday, March 1st. It's a new month, and the markets are positive mood. Thanks to yesterday's cut in the reserve requirement ratio, banks in China are allowed to lend more money, more credit, more economic activity, more global demand. Good mood. This probably came to mitigate PMIs, which were negative. Both fell below expectations. Also the government and also the official one. Okay, but we also had soothing words from the U.S. Treasury Secretary. He heard from the Chinese authorities that they will not devalue the yuan too much, that they're keeping their stability. More support from central banks. Apart from the RR came from Bill Dudley of the New York Fed. That was slightly dovish. In general, we have a better market mood with oil moving higher. WTI at the 34 handle at the high end of the range. But data wasn't so good. I talked about the PMIs in China. Eurozone inflation missed. That's why euro dollar is suffering a lot. Okay, minus 0.2 on the headline figure, which matters to the ECB year over year, and only 0.7 on the core. So no silver lining for the ECB. Bad figures also for the US. The Chicago PMI and pending home sales, and Australian rate decision did little to move markets. Today's figures, Eurozone manufacturing PMIs. So far, we had a disappointing one from Spain. We'll look at Italy. Soon, UK manufacturing PMI. watch out for a negative surprise there. And in general, watch out for wild action before the release. Is it a leak? Is it front running? You never know. Of course, a few months ago, we had also a positive surprise. So anything is possible. More importantly, German unemployment change at 8:50, well, just after the show ends. Let's see if the positive trend continues. Again, it doesn't reflect what's really happening in the labor market, as we heard from Sinatra, but it's, of course, a market mover if we see the unemployment change continue dropping. Moving on, we have the Eurozone unemployment rate, a bit less important than the German one, expected to remain at 10.4. For those trading the Kiwi, we have the bi-weekly auction of milk prices. They fell 4 times in a row. Perhaps this time we'll have a bounce. And most important event for today, the ISM manufacturing PMI in the United States, expected to bounce just a bit. Oh, again, I forgot the Canadian Canadian GDP expected to be flat on the quarterly basis, and monthly for December, small rise of 0.1. It could be a make or break point for the Canadian dollar. We'll soon show the chart. The ISM manufacturing PMI, important as a first hint for the non-farm payrolls on Friday, expected to rise from 48.2 to 48.5. I will not be surprised if it falls below 48, because the manufacturing sector does not look good in the United States, nor in the Eurozone, nor in China, nor well, everywhere. Okay. Also, Italy's PMI disappointed, by the way, 52.2 instead of 52.5. So just strengthening what I said. Okay, and yeah, GDP in Australia. I think we didn't miss anything. Now let's look at the charts. More interesting. Euro dollar. Pressure to the downside range between 108.50 to 109.60. Further support 107.70 and further resistance 110.80. German unemployment, Eurozone unemployment to watch. For the pound, it's moving higher. Let's talk about Brexit. Perhaps some hopes for the manufacturing PMI in the UK. 140 is resistance, 138.40 support. Dollar yen, better market move. Well, it's breaking above 113.20. Stronger dollar, and more importantly, weaker yen, because there is no demand for a safe haven. 114 is resistance. 111 is very, very, very strong support. Dollar CAD currently 135.10. Critical support at 134.60, which was a double top, and now we're getting close to this line. Okay, GDP could be a make or break. Aussie dollar relatively higher thanks to the better market mood. Nothing from the RBA, and ignoring the Chinese figures. But happy with the Chinese cut of the RRR. And the Kiwi dollar ahead of milk prices. The past hour falling a bit, but in general higher within the 65.50 to 67 range. Okay, before we go, I see a few questions. Pairs to watch today, quite a few. I would say euro dollar and pound dollar in the morning, because we have data from both areas, and then the Canadian dollar in the afternoon because of GDP. Yeah, so, and at night it's the Aussie. So I would say we will really have an eclectic mix today of data from everywhere. I think maybe the euro dollar remains more important, because not because of the data, but because of the ongoing pressure from inflation figures, and perhaps we'll have more leaks, reports, talk from the ECB that will move it. So perhaps in the morning more important than the pound. Yeah, Volkswagen is the capital of the VW Kingdom. If we had a bad German employment change, how would that affect the pound? I think German unemployment figure will have a limited effect to the euro. Might have a strong effect on the euro, but I don't think it'll have an impact on the pound. Aching chart. Okay, let's look at this chart from Sinatra, the aching chart of the German state industry. Yeah, okay. Yeah, it's the map of Wolfsburg, right? Yeah. Thanks, Sinatra. Anyway, I think we covered everything. I wish everybody a safe and successful trading day. Watch out for euro under pressure, the pound in its recovery attempt, the Canadian dollar with its critical support, and the first hint for the non-farm payrolls. Let's see if the positive market mood really continues or not. We have seen mood changes quite often, too many times, and yeah, so wish everybody a safe and successful trading day. Thanks for all the questions. Thanks for coming. Spread the good word, and see you tomorrow. So thank you and bye-bye.